What is up, YouTube? What is up, guys? The Composer Trader here, and welcome back to another post-trading analysis video. And today we're going to be discussing two trades that we took last week. It's kind of a weekly recap of the trades that we took last week. It was a more easy week compared to the week prior to that because we had an amazing trading week, netting over 20%. And oftentimes, most of the times when we have a week that's that crazy, the second week tends to be pretty chill. Now, there were always and there are always amazing trade opportunities. It's just that the timing last week was a bit unfortunate, giving setups at like 6 in the morning or 4 in the morning, which is not my trading times, okay? But I managed to catch an amazing trade on Kaspa, which was a winner, netting me almost 10% in a single trade. But we also took a loss on Pepe. And I want to go over that because it's important that you guys also see the losses that I take and how not everything is 100% accurate. I never claim to be 100% accurate. It's just that if you trade higher probability TCT schematics, you will make a lot of money if you take consistent trades using the confirmations. So we're going to go over Kaspa first, and then we're going to head into Pepe. So you can see right here, amazing Kaspa trade. But let's dive into the confirmations that we had. So as always, building some context, the thing I had on Kaspa initially was that we were in this very, very high time frame distribution. That's kind of still the case, you know, but am I convinced we're going to visit all the way, we're going to come down all the way towards this range low? Not really. You know, it will have to be very bearish for Kaspa, and the market is kind of in a bullish environment overall. So I'm like, I don't know if that's going to happen. We did have a significant move down. We swept some liquidity on the left right here. So that could already be enough for this distribution schematic. Okay. But we came into range discount. We got an expansion up. We're back in premium. But overall, from the low to the high, we were in this local uptrend where we were making higher lows and higher highs following the 6-candle rule as explained in the mentorship. And we came into an area of support here on the left where we could get a bounce for a potential higher low for the higher high, kind of continuing that most local upwards trend. So on the left right here, you can see that we came, it was kind of this 1 hour doji candle right here. Now, normally, when we pull order blocks, you will have a bearish candle causing a bullish expansion, leaving a fair value gap. But whenever your block is in this pivot point, and you can see it's a very bullish candle, where you have a wick with a bullish candle close, and it's a fairly large wick, showing that sell to buy and closing higher. Because it's in that pivot point, I will still use it. Okay, I will still use it only because it's in that pivot point. It could be an order block on the lower time frame, but it doesn't really matter. Okay, it's a general area. We're not trading the bounce from that area. We're trading the confirmations coming into that support POI. So where we're in a local upward swing, we were looking for a higher low for the higher high with confirmations, but obviously structure from the top down was pointing down. So we had from top to bottom a low, lower high, and a lower low. And whenever we're downtrending, we pull our range from the range low towards that range high, and then move up or move down back towards the equilibrium confirms our range. And from here, you can see we have a range low, we have a range high, and then we were getting that deviation 1, showing signs of a potential accumulation in a place where I am expecting a potential bounce. So the moment I see that deviation 1, I extend that range low to the deviation low, and I look for potential signs of an accumulation and confirmation on that third tap. So we're going to look, okay, where is the potential extreme liquidity or extreme demand? So that the third tap is valid from a model 2 perspective. And obviously, we're going to watch for another sweep of this range low in case we're going to get a model 1 accumulation. So for the model 2 POI, we have to measure our first market structure 2 from the low up. So we go up, we come down, higher low and higher high, again, following that 6-candle rule. Right here is the first market structure low that's created, making it there for your extreme liquidity. And, in this range, there wasn't really an obvious POI from a demand perspective. And whenever I don't really have an obvious POI from a demand perspective, I like to keep my focus on the extreme liquidity grab. We do have this demand zone right here, but that already got immediately mitigated on this local pullback. But if we measure that local pullback, that's a bit too close. So if I have that bounce right here, your tap 2 and your tap 3 are fairly close compared to tap 1 and tap 2. You can see the distance between these two taps is fairly close. So most of the time when, tap 2 and tap 3 are this close, price could come back on later for those lows to actually put in the high time frame third tap. Because then if you zoom out on like the 1 hour, that doesn't become that obvious. Okay, this low doesn't become that obvious from a 1, 2, 3 perspective. You rather want to come back down, sweep that low again, and then potentially go higher. So truly, the extreme liquidity was the main focus for this setup. And right here on the 26th of November at around 12 p.m., we got that sweep again, indicating a potential Model 1 reaccumulation schematic coming into support, following the local trend from low to high. Now, what's so beautiful about this setup is that you have this amazing liquidity curving down. So right here from this low on, or from that high towards this high, you can see that price is curving down, where this low is a higher low compared to the previous one, and we have a higher low here and a higher low there, higher low there, higher low here on the lower time frame. You can clearly see that all these lower highs are stacking up, and that could make for a nice squeeze towards the upside when price starts to break structure and starts to get that momentum up. Obviously, to confirm our accumulation model, we have to watch the structure from the highest point between tap 2 and tap 3 down towards our third tap low, break back to bullish. So we have our tap 1, we have our tap 2, we have our tap 3. This is the highest point between tap 2 and tap 3. So we have to measure our market structure from the top down towards this low and see whenever that breaks back to bullish. So if I go on the lower time frame, like the 50-minute, for example, you can see right here we have that lower high and that lower low. And then right there, we have our 15-minute market structure high, and we break that back to bullish right here. Okay. Now you can also go on the 5-minute, and when you're on the 5-minute, you can see that's not even valid structure. Let's go on the 3. Maybe it's on the 3-minute. Yeah, so on the 3-minute, you can see that you have even more refined structure here, making lower highs and lower lows, where you can use the domino effect, also explained in the mentorship, to confirm that rotation way lower to get a better risk to reward entry. Now, my entry wasn't at this initial break of structure. I wasn't really watching Kaspa. It's not a pair that I always watch. I did add it to my watch list right now because it has been acting as a nice trading pair. But initially speaking, this would have been your entry right here. Okay, that could have been your entry. And you can go long right there. You can put your stop loss below the low. And then you can target a full on rotation back towards that range high for a lovely 4-to-1 risk to reward setup. Okay, and that actually also ended up playing out. Now, my entry was a bit later, okay? Now, this also goes to show that if you miss the initial entry and you miss that initial pivot point, it doesn't really matter because there always, or most of the time, there are a lot of re-entries along the way of coming to your target, which will be the range high. So what I did is I was following this high time frame structure from the low up. So from the low up, following the 6 candle rule, we can see that we have a high, and we have a higher low, and we have a higher high right here, right? So we are in a confirmed accumulation. We have a liquidity trail. We want to see a rotation back up towards that range high. So you preferably do not want your structure from the low up to be breaking back to bearish. So right here, we have a 1-hour demand zone, and this is actually a proper demand zone right here, where it's the last bearish candle before the bullish expansion towards the upside. And that will be your pivot point order block, also explained in the mentorship. And if price comes back down in there, we can look for a potential long, continuing that upwards trend. And, when we're looking for longs in that area, you're actually looking for longs when the high time frame order flow objective is to come towards that range high. And what I mean with high time frame order flow objective, it basically means what is the high time frame going to do? And because we haven't a confirmed accumulation, the high time frame should move up towards that range high. So if you are here, you can watch for low time frame entries to find a high time frame target. And it's trading in a bullish environment. It's trading in bullish context because any retraces here, eventually we need to make our way up towards that range high. And then we managed to get a picture perfect Model 1 reaccumulation coming into that POI. So coming into that POI, we can see we're trending down, making lower highs and lower lows just like this. And obviously when we're making lower highs and lower lows, we pull our range from bottom to top. We can see that range low. We can see the range high. We have that deviation 1. After deviation 1, we extend our range low to the deviation low. And then we get that second deviation indicating a Model 1 that's tapping into that 1 hour order block. And then right here is breaking market structure back to bullish on the lower time frame right here. So basically the entry that I got was the exact same entry that you could have taken all the way down here on the higher time frame, but I managed to catch it on the lower time frame, and now I can have a low time frame entry using the exact same strat for a high time frame target. So my initial entry was kind of up here, did my stop loss below that low, and then targeted all the way up here. Boom. Now, what I personally did is at the moment price came up, technically speaking, when you look at this accumulation model, the technical target is met right there. But because we were in a higher time frame accumulation model, I didn't take any profits. And what price ended up doing is we came back down. I'm wondering if we came into a demand zone. I believe we came into a demand zone. I'm not completely sure what the demand zone was, but what I saw is that price came down. We hit that technical target from this accumulation perspective, but then we came down, leaving all of this liquidity right here above. So I just knew it's going to be a matter of when and not if that price starts breaking back to bullish and then sweeps all that liquidity and starts moving higher. Okay, so the moment my initial entry was right here with my stop loss here, the moment right here that we broke back the bullish, I trilled my stop loss from this low to that low and added my position that I was risking less back. So I again have a 1% risk. So initially I was risking 1% with my stop loss underneath this low. Then I trilled my stop loss at that low, so I'm risking less. But the risk that was deducted from my initial risk, I added back when we broke structure to get that extra gain. And therefore, I think I made around 9% on this move up. And I took all my profits up at that first high. Like that was my target. That was the plan. And that was an amazing setup. And you can see that initial entry and target on that first screenshot I showed you in the beginning. Absolutely beautiful. Model 1 within a Model 1. With a return to zone, it's just perfection. Like it's beautiful. And this push up is not caused by longs opening. This push up is caused by stop losses getting hit that were located right here that we were indicating and showing with that liquidity trill. Okay, so absolutely overall textbook picture perfect model, and like you only need these trades like once a week. Like the target is making 5% a week consistently. This was almost 10%. In a single trade. If you can make 5% a week consistently, you are going to become so wealthy. It's not even funny, right? You just have to wait for high probability models. And this was like, there were some other high probability models, but regarding timing that we actually managed to catch this one, this was one of the few that we had last week. So it's like you can wait the entire week and then right here on Thursday, catch one entry and then cash it out on the weekend. And you still have your target, but you would have to be patient Monday, Tuesday, and Wednesday, and Thursday morning, which can take a toll on you because most people tend to lose their profits on those shitty trades in the meantime when waiting for a high probability model. Now, enough about Kaspa. Let's dive into the Pepe setup. So, regarding Pepe, Pepe came into price discovery here on the left. Right here, we can see that's the all-time high or was the previous all-time high. We came into price discovery And from there, we had this Model 1 reaccumulation schematic that got confirmed on this breaker structure. And what I was looking at, whenever I have a Model 1 that has this V-shape recovery, and you can see right here what I mean with V-shape. Right here, you can see this sell to buy. So we have a Model 1 that has a very clear sell to buy breaking structure. And whenever we have a sell to buy breaking structure, I want price to respect, and price tends to respect the market structure from the low towards that high. So if you go on the 45 minute, right here, you can see that we're making higher lows and higher highs, just like this. And that this is our market structure low, right there. You can see that price ended up respecting that uptrend because we SFP'd that 45-minute low. And an SFP is not a bearish breaker structure. It actually means the opposite, that price could have a rotation back up towards this high. So I was like, okay, I'm seeing a Model 1. I wanted to respect the structure from the low up. Checking the volume profile, we also had acceptance back inside our volume range. So I was like, this can also be a back test of the volume area low for higher. So from a context perspective, we were trading in bullish context. And what I was looking for right here is I was seeing this 15-minute demand zone, which is again a pivot point order block because it's located right in the pivot point of that market structure pool. And coming into that support, just like on Kaspa, we were creating a Model 1 accumulation, A1, A2, and right here, A3. So I'm seeing a Model 1 accumulation coming into a POI that's very, very strong and is, combined with high probability context building. Context is in our favor. And then looking at the schematic itself, we can see that we are stacking up all these liquidity highs right here at that point in time. So I'm seeing a Model 1, I'm seeing a return to zone in a high probability area to look for a long, and I see a breaker structure back to bullish. So right here is when I go long, I put my stop loss below the low, and I don't target that range high because we are in a high time frame accumulation. So I wanted to at least target this supply zone right here on the left for a 7.5 risk to reward. And from there, see how far we can take it. And obviously, when we hit that supply zone here on the left, which was the only supply in our way of stopping price to come towards that range high target, we're going to move our stop loss to break even after hitting that take profit and then let it run, right? So you can see that, unfortunately, our entry was right here, and price wanted to dip down a bit more, sweep that low before actually coming up and, completing that move that we were expecting and hoping for on this initial entry. So that would have been, and was, a loss. But I always tell the community and the people, if you're trading a high probability model and it fails in a high time frame context or high probability context building, don't just skip the entire setup. Look for a re-entry because they're probably just manipulating price a bit more before moving it into your direction. Like, that entire idea and the entire plan is not invalidated because we go lower. It's just that the initial entry is invalidated, but the plan is the same from a context perspective. So what you could have done is, you could have seen this sweep of the low, kind of see this 1, this 2, this 3, and enter on this break of structure again. Now, personally, I didn't do that. I don't know what I was doing at this time. I think I kind of missed it, but it was also on Thanksgiving, by the way. So New York did not open, so that could have also been a reason as to why price was kind of like doing a bit more sketchy price action prior to moving up. But overall, that was a loss, but it's a loss. That's not a real loss. One single trade is not going to make you rich or going to make you profitable. The fact that you can identify high probability models and stick to your plan, that is what's going to make you profitable. Okay, so even though our high time frame idea was correct and price move up, looks like we grabbed extreme liquidity before coming down again, but it would have been a win either way if that didn't happen, this tiny deviation. But The fact that we can identify these high probability models, trade them, stick to our plan, that is what's going to end up making us profitable, and not the fact that, we have one good trade. It's all about consistency every single day, every single time. And you have to program yourself into getting satisfaction from following your plan and being patient than having one crazy trade that you shouldn't be taking because it's not in your rule book. So we had some trades last week. These were the two most important ones to discuss for me personally here on YouTube. I appreciate all of you guys for watching, and I'll see you all tonight if we take some trades today, and otherwise probably tomorrow. Peace out.